Hello, hello, and welcome to another episode of the Bitcoin Cash News Show. No, the Bitcoin Gold, Bitcoin Silver. No, the original Bitcoin News Show right here on the World Crypto Network. That's right, ladies and gentlemen. Thank you guys so much for joining us today. I'm so excited to talk to you guys. We have so much to talk about. I can't even get my show straight here, guys. We got so much stuff to talk about. So thanks so much for joining us on this beautiful Sunday afternoon. This is the Bitcoin News Show for the week of November 6th. I have some amazing guests, guys, today, some amazing panelists. I'm really excited to get into what's next for Bitcoin, right? Because we did just end the 2x craziness and nonsense. We saw those guys, back off completely. As I said, and as I've stated in many videos before, guys, the 2x was going to be nothing. It was going to be a non-event, and they backed off. But now, of course, we got new stuff to deal with, right? Crazy new stuff. The Bcash fiasco that's going on. I'm sure you have been asked about Bcash as many times as I've been asked about Bcash today, and it's kind of crazy, right? Just a little bit of an announcement here. The Bcash troll army was actually able to get one of the World Crypto Network videos taken down. Our last video, the Bitcoin group on the World Crypto Network, got removed. It's actually within YouTube, got set private and is unable to be shown right now. It locked and private. So that was kind of crazy. If you guys want to help us, contact YouTube and help us tweet out to YouTube to try to get that video back. It's kind of crazy, but this is the only other time this happened was during the Bitfinex hack when we got a video taken down. So definitely, guys, check that out. That's some crazy stuff. But look, I want to go ahead and introduce my guests because we have some world-class guests here, people. I'm just so super proud and happy to present these guys to you because I know we're going to get a lot of great information. So first, let's go through and introduce Mr. Jack Meller, the creator of the Zap Lightning Wallet. Jack, how you doing?
I'm good, man. Thanks for having me.
Awesome, man. Really glad for you to be here. Next, we got Mr. Kyle Torpy, Bitcoin writer, featured in Forbes, Bitcoin Magazine, basically everywhere that there's Bitcoin and editorials, you'll find this guy. Kyle, how you doing?
Pretty good. Thanks for having me, Vortex. Big fan of the show.
Yes, sir. Right. We're really a big fan of you, Kyle. We love your articles, man. I mean, you are one of only pretty much two other journalists that I trust in the Bitcoin space. So I thank you so much. I believe this is your first time on the show. I don't know why it took me so long to get you on the show, Kyle, but thank you so much, man, for joining us. And finally, ladies and gentlemen, our special guest this evening, Bitcoin developer, and does a ton of great projects for Chain Code Labs, Mr. Matt Correll. Matt, how are you doing tonight?
Pretty good. Pretty good. Thanks for having me.
Awesome, man. Thanks so much for joining us, Matt. You definitely got some, being a Bitcoin developer, definitely have some technical expertise that I'm really excited to take advantage of tonight. So guys, without further ado, let's go ahead and get right into the first topic about this Bcash stuff. Now, you guys know I'm going to have a couple of things to say or two maybe. So first, though, I want to get the guests. I want to get remember, I'm not the smart person, guys, here, okay? That's why I bring the smart people on. That's the goal here. We ought to ask the smart people first. So let me ask you, Matt, first, on your opinion of this Bcash thing right now. So basically, we do have a bit of an attack going on here. I mean, it's a kind of relatively weak attack, in my opinion. Bitcoin has seen much worse and will see much worse in the future. But, with the coordinated attack going on right now of the timed price, the crazy defamation of Bitcoin all across social media, right? I just wanted to know from you, Matt, what do you think about all this? And is this really a big attack? Is this something to be actually worried about? Or is this just Roger's latest attempt at harming Bitcoin?
I mean, I don't know, right? Like the Bitcoin Cash stuff, you have to give them some credit, right? They didn't pull this like with 2x. They had full replay protection. At least many of them are focused on having a different branding. It's separate from Bitcoin. It's a separate thing. They can go their own way. So you certainly have to give them a lot of credit, where Segwit 2x just didn't bother trying. They really kind of did it the right way. I mean, we'll see, right? Like there's clearly a lot of manipulation in the market right now. A lot of the current price rise and the current hash power, with current price rise, which drives the hash power to work on Bcash. Clearly, a lot of that is a few individuals pushing it. There's obviously a lot of demand in some parts of the world for people who actually have bought into the Bcash vision and are interested in using that over Bitcoin, and that's fine. But the current, the last few days, the run up in price it's obviously not a completely organic thing, right? That's probably majority not organic. And we'll see where they go, right? Right now they have a dev team that is, a few people, and they're making decisions for their currency. There's no kind of community decision-making process for their system. I assume that will change in the future, as they kind of mature and are no longer this little project that, a few people plus Nchain are working on. But I'm not kind of worried that it's gonna in some way supplant Bitcoin or take over from Bitcoin or become Bitcoin. It is something different. It's something, they're calling it something different. And let them work on their vision, let them see where their vision goes over the next few years, and see a separate system, right?
Yeah, see, that's really interesting, Matt. See, because it seems like to me, all the really intelligent people, people like Bitcoin developers like yourself, it seems that they're not really worried about this. It seems to me you guys can see right through this obvious pump, right? Because I mean, obvious pumps are obvious, and it doesn't sound to me too much like you're worried about it in the long term at all. So would that be about accurate there, Matt?
Yeah, I mean, they clearly don't have the kind of technical backing that Bitcoin has. They don't have the level of organic interest from technical communities or from communities of people actually wanting to deploy it in real world systems. They obviously have a lot of interest on the speculative side, but there's still just such a limited excitement about it from people who really kind of want to buy into this space that we'll see where it goes. But for now, it's still very much a kind of brand new altcoin that hasn't driven much interest yet, aside from a large ad spending, a large pump spend from a few people.
All right, very interesting. All right, let's go with our next guest. Let's go with Kyle Torpy here. Kyle, you actually, I'm really excited to talk to you because you actually wrote an article in Forbes about what's coming up next for Bitcoin. And so we're going to get to that, but that's going to be really exciting. Before we get to that, though, Kyle, what is your comments on this kind of crazy coordinated Bcash attack pump attempt?
Yeah, it was kind of weird to wake up and see the price had, while I was sleeping, it had doubled and then gone back to right to where it was before. So within a few hours, it doubled and then went right back down. So it's not like the market is actually acting very irrational right now. But I do agree with Matt where he talks about how they are trying to be like a completely separate thing. They weren't trying to cause a lot of chaos and confusion, at least at first, with the replay protection and everything. But they are kind of trying to steal the Bitcoin brand in a way where they're calling it Bitcoin Cash, and I know a lot of people like to call it Bcash instead because they don't want to give them the Bitcoin branding at all and stuff like that. But the real issue now is this the way they're like hyperinflating the Bitcoin Cash through the difficulty adjustment algorithm, where they'll mine like blocks every few minutes every now and then it'll readjust and then they'll mine blocks like much longer period of time. And what that does is it basically gets miners to move over to Bcash, and now that affects the amount of time it takes between Bitcoin blocks. So now blocks are being mined slower on Bitcoin, which creates a bigger transaction backlog, which helps with their propaganda of trying to push Bcash in the first place. So I don't know if this the way they did the difficulty adjustment algorithm was on purpose, but it's definitely helping them make the case that like Bitcoin has fees that are way too high. I know I saw a tweet from Mike Belshey this morning, or maybe it was last night, where he was talking about like the average fees in a block was $24 or something like that. But he'd left out the part where, yeah, because 30% of the hash rate moved over to Bitcoin Cash because they're hyperinflating the currency. So there's just a lot of weirdness going on now. And we're also seeing like different parts of the SegWit2x CEOs. Some of them are like coming out in support of Bcash, and then some are, like I saw one says Casares from Zappos say he kind of jumped the gun maybe with SegWit2x and got a little too impatient, and now he's ready to be patient and maybe work on other stuff. So it's interesting to see what some of the SegWit2x supporters are doing now too. It was kind of easy to see that once that fell apart, a lot of them were going to move to either Bitcoin Cash or Ethereum. So because their businesses rely on those lower fees to some extent.
Yep, absolutely. And of course, this show did start right about when the BCH difficulty just rose. So I believe it's now, 300+% more profitable to mine to Bitcoin. So definitely cue that BCH dump any second here. Let's go ahead and go with Mr. Jack Mallers. What do you think about all this craziness? Is this just, are you worried at all about BCH? I mean, is this just another, do you find this attack clever? Yeah, so do you find this attack clever? And are you worried at all about this attack? And, yeah, I guess that's about it. Sorry, go ahead, Jack.
No and no, of course not. I do agree with the other panelists in the sense that it was not as reckless as an attempt as 2x. I still think there's a little bit of recklessness going on, especially with some like reputable names and websites that I won't name, but hopefully it's obvious, that are just being intentionally misleading. Because that can, harm users' experience with Bitcoin in a totally unnecessary way. But no, I just don't find it really particularly interesting. I think like what Kyle touched on is a little more interesting, which has been the reaction of some of the 2x companies after 2x quote unquote failed or resigned, or however you want to put it. Their reaction and, some of the motives and like their relationship with Core now and some of the other developers in the industry. And, I find that more interesting, and what seems to be like the influence that the venture capital industry and a lot of these people are having in Bitcoin, I actually find interesting, because that's going to be a relationship that lives on forever or for the foreseeable future in Bitcoin. But as far as Bcash goes, I mean, my mom was texting me last night, like freaking out, refreshing CoinMarketCap. And I just was never, it's just not very interesting. Like, I feel like I've seen the end of this episode, I feel like we've watched this episode so many times, and it's just boring to watch the same show over and over. So no, I'm not worried. No, I'm not scared. And I'm not even really too interested. So yeah. HODL.
Yeah, there you go. There you go. That HODL people, HODL. That's some honesty right there from Jack. And I have to agree. And remember, we've seen this show before, right? With Ethereum earlier in this year. I mean, how many people got messaged about the flippening, right? That actually never went ahead and never commenced. So very interesting stuff, guys. Listen, I'm going to give my few points here on this. And then we can move on to the next topic, which is the best topic about what's to come. And what's to come, people, is amazing, amazing things. So look, this is a coordinated attack, right? We have the people spamming the mempool. We have people timing the pump of this altcoin from a single exchange, pretty much BitThumb in Korea. All this volume coming from South Korea. All of this together, of course, combined with the massive defamation campaign that's going on with Bitcoin right now. I mean, it's all over Reddit, Twitter, all these trolls, less than 25 followers, spamming craziness. It's nonsense. I mean, you can clearly tell that this is a coordinated thing, an attack on Bitcoin. And look, I'm all for innovation, and like the other panelists have said, we want innovation. We champion innovation. We love this global financial renaissance that's going on. But the problem is when people like Jihan say, they can just exist simultaneously, no problem. Even Andreas tweeted this out. Yeah, no problem. We'll just see where they go. Look, they're clearly trying to steal the name. They're clearly trying to steal the brand. They're clearly trying to steal the logo. They're clearly trying to confuse new people and control their own coin. Like, they're basically, the goal, of course, is power, right? And how do you get power? You get it through money. And and when you can create your own money, like you can with Bcash, pretty much, right? This is their own centralized token. This is what you can do. And look, there is only a few pools mining this coin, and all of these pools are all working for the same people. And so it doesn't get more centralized than this. And they just released the fact that Rick Falknuge, right, is now the CEO of Bcash. I mean, whether you want to think that's true or not, the fact is he did it. He signed his name to it. This is just insane. And I just really want to clarify here, without SegWit, which this coin does not have, it's never going to get any of the future tech upgrades like Lightning Network, Schnorr signatures. It simply cannot compete in the long term. And this is really important to remember. People, have some perspective here. We are going to have the futures market soon. We're going to have the ETFs soon. All of this amazing new infrastructure on Wall Street will not be built off of an altcoin like Bcash. Okay, so remember, we're not trying to build PayPal 2.0 here. What's the most important thing is censorship resistance, is decentralization, is to disrupt gold and the store of value market, which is 100x times bigger than any cash, than any cash market or anything like that. You know, gold is way, 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 way bigger market cap value. So just remember that at the end of the day, what we're fighting here for is decentralization, censorship resistance, no third-party counter risk. This is what we want. We want a truly decentralized, censorship-resistant token, and you will not find that with Bcash. So I just wanted to say that to everybody. To, you know, clearly nobody in the panel here is worried about it. I'm not worried about it. Let's just move on and let them try to pump their coin, because we have so much amazing stuff coming down the pipe, which we're about to talk about now. And this is why I'm so excited to have people like Matt on to talk about these kind of things. So let me ask you, Matt, what you know, I want to go into detail of a few different features, but first, as a general overview, tell me, Matt, like, what has you most excited coming up that we can look forward to now that the 2x is behind us, and you know, now that we've established that Bcash is just an altcoin? What is exciting for you?
Yeah, I mean, I think obviously, I think we finally have a bit of time to focus now. You know, from the development community, you know, more than Bitcoin Core, obviously, I don't think we're going to see, you know, any major consensus changes coming down the pipeline in the next 6 months or anything like that. There's work ongoing on things like Schnorr, which can make multi-sig way cheaper. There's a number of things down that vein, but really, I'm excited about, you know, what does deployment of Lightning start to look like when people start deploying Lightning for small value payments. I think that's going to be pretty transformative for the Bitcoin industry as a whole. You know, anyone doing $10, $20, $50 payments can start to get a whole lot better user experience, whole lot better properties. You know, there's a lot of people trying to do all kinds of better technology on backends for exchanges. So whether, you know, that looks like Liquid, or whether that looks like payment channel solutions, or settlement between exchanges to improve the ability for people to arb and to do market making activities across exchanges. Not to mention, of course, the CME futures, plus obviously the LedgerX futures, which are already live, I believe. So there's a lot to look forward to. You know, I wouldn't focus on too much coming out of, you know, Bitcoin Core over the next 6 months. There's obviously a ton of interesting work in terms of deploying SegWit and Bitcoin Core, but, you know, nothing that's going to be hugely earth shattering and is going to change the face of Bitcoin, as much as a number of other things that are being built on top of Bitcoin probably will.
Awesome. All right, Kyle. Again, you wrote the article in Forbes, man. So tell us, what has got you excited that is coming down the pipe for Bitcoin pretty soon?
Well, we actually have a lot of things, like Matt said, that it seems like they'll be able to free up some space in the blocks without doing the hard fork increase. Like you said, we have SegWit, and, you know, blockchain.info by themselves could effectively create like a 40% increase in the block size just by adopting SegWit, because they allegedly account for 40% of all the transactions that are going around into each block. So right there, that'd be a huge increase. If people are really worried about the high fees and stuff, then that should lower the fees right there. And then Schnorr with the signature aggregation to free up some more space, and also the financial incentives that creates for people to use CoinJoin, because it would actually be cheaper to do it that way. And then in the actual article, I also touched on RSK a little bit, which is the Ethereum sidechain, which I think will be the first deployed sidechain for Bitcoin. I don't know how far along Liquid is. I think Matt would probably know, but I think they're supposed to do like Q1 of next year. RSK says they're going to launch the Ethereum sidechain before the end of this year. And I'm wondering if people will decide to use that as kind of like a big block sidechain, kind of, because it's supposed to have larger block sizes, even though it's supposed to be for smart contracts and stuff like that. It can effectively still be used in the same way. And I think people would prefer, you know, some people say we should have like Bitcoin and then either Litecoin and Bitcoin, or Bitcoin Cash is like a lower denomination, like people can use that for smaller payments. But I think if people have the option between like main chain Bitcoin and then maybe a bigger block side chain, then they'll definitely prefer the the sidechain that's attached to the Bitcoin currency, because people want the liquidity that comes with using Bitcoin in the first place. But I do know one question I wanted to ask Matt was some of the concerns that go along with creating like a big block sidechain, because I know Paul Stortz and Cryptax, who've been working on drive chains, have been thinking about or talking about launching some sort of big block drive chain. So Matt, could you talk about if there are any concerns like in terms of the centralization of mining if such like a big block drive chain was launched?
Yeah, I mean, I can certainly get into that a bit. I think the obvious concern with any kind of big block sidechain is that it turns into an extension block for the purposes of miners, right? If you're a miner and there's this other thing that you can mine using the same hash power, and it has a significant amount of fees, you know, whether that's just because of volume or what, then you kind of have to, right? Like if you don't do it, you're going to be making less money and you'll be one of the schmucks mining Bitcoin when Bitcoin Cash has just had an EDA, and your miners are going to tell you like, screw you, I can make more money if I mine on a different pool. And so you're kind of going to be stuck mining it. So the obviously kind of the centralization pressure in terms of optimizing all your infrastructure and having infrastructure sufficient to mine something which is a bigger block or has you know, some of the properties of just massively increasing the Bitcoin block size could still be there for a sidechain. Now, I think it's my understanding that the RSK kind of initial launch is going to have some combination of merged mining, which has a lot of these issues, and also kind of signing by reputable companies in this space. I think that makes a lot of sense, right? You look at, you know, the distribution of hash rate right now, and, you know, certainly it's not as big a deal on Bitcoin, where, you know, at least you have all the full nodes enforcing all the rules. They could reorg and double spend, but they can't, you know, print money. They can't steal money explicitly. Whereas for a sidechain, obviously they can if you're just doing it using hash power. So, you know, I think that kind of approach makes a lot of sense. You do either some hybrid or maybe just having it signed by reputable companies in the space. You know, obviously that's less kind of decentralized in the Bitcoin terminology, but, you know, if you're using it for smaller value payments, if you're using it for lower latency payments, it might start to make a lot of sense, especially if you're, for example, you know, especially if you're a customer of, let's just throw out a name, let's say Zappo, or like you're a customer of Zappo, you have their custodial wallet, they're already your custodian. Having that money in a sidechain in which Zappo is a member or is a cosigner doesn't materially change your security model, might in fact actually improve it, and gets you all kinds of nice benefits.
Yeah, sort of a follow-up to that. With the liquid sidechain, can that only be used by customers of like Zappo or these centralized institutions, or is there also like a wallet where you can just have like sidechain Bitcoins or liquid Bitcoins that like operate independently kind of?
Yeah, I mean, it's my understanding that it's primarily for customers and the exchanges themselves who are participants in liquid exchanges or other businesses. I don't know offhand, like I haven't worked at Blockstream in 12 months or 8 months or something. So that might have changed, that they might be tweaking that approach, or that might change in the future. Obviously, there's nothing inherent in the kind of technical design of it for that to be a requirement. But I believe the initial kind of planned deployment was that it's primarily, you know, for people moving between exchanges, people who are market makers, people who are doing, you know, arbing prices between exchanges, that kind of thing.
Yep, very interesting. So I mean that's the liquid sidechain. I mean, is designed to be much higher throughput. And yes, it's a little bit centralized because you have to do some trusting of some, like you said, some reputable people in the space. But I mean, this is how you build layers above Bitcoin, because all those sidechain transactions will be secured on chain, right? So you have to initiate a payment channel transaction on the Bitcoin blockchain. So when people say, it's kind of funny, you know, people say like sidechains and things is off chain, but it's really not, right? You still have to secure this on chain, and that's what keeps this secure. That's what keeps this decentralized and censorship resistant, is to make sure that everything that we can possibly do is anchored as much as possible to the actual Bitcoin blockchain, because that is the most secure, censorship resistant chain on the planet that we've ever had. It is the only chain that is running at scale. So that's really important, guys, to remember. So then let's go to Jack. Jack, what is your comments on the conversation so far, and what has you excited about coming up shortly with Bitcoin?
Yeah, so I mean, outside of technicals, I think the CME futures is very exciting. I don't think its impact is greatly understood within the community, at least from what I've seen on Twitter and stuff, which may not be accurate. But and then I think that will also bring along some more impactful financial products as well. So that's interesting to me. And then obviously the Lightning Network and things like Schnorr. Related to the BCH conversation, I think there's maybe a little bit of misunderstanding on, like, there seems to be the opinion that, you know, if you want to make cheap transactions, merchant type transactions, application level, you know, software with Bitcoin and scripting language or whatever the case is, that you go leverage like bigger blocks. And then if you want to just like store your savings, then you like use Bitcoin. That's false. I think that the difference is the approach in how to obtain scalability and how to obtain some of these features. And it's just the different approaches. One side, you know, seems to just want to increase the cost of resources in a fairly straightforward manner, which my personal opinion is just not very interesting. And then you've got the side that seems to take account, you know, security and decentralization and some of the main core value propositions that Bitcoin has shared since the white paper. So anyways, I think that that's very important. Things like Lightning are going to enable a lot of very cool things. I think we'll start to see Lightning mainnet transactions for the highly technical and maybe like a beta state before this year is over. It's just my guess. I don't work for any protocol team or anything. It's just on my behalf. So yeah, that's interesting. And I think Bitcoin will look a whole lot different in a year from now. And I mean that in the best way possible. So I'm excited.
Absolutely, man. Awesome stuff, guys. So thanks so much for your general overview. You know, I just really want to bring that home. Look, it's not either or, right? It's not about block size. It's not about saying, oh, hey, Bitcoin Cash is 8 megabyte blocks. Let's use that as a currency and only use Bitcoin as a store of value. No, that's a false dichotomy. Bitcoin will scale to do everything that we need it to do, okay? Because we take a measured approach. There is testing. There is years of testing to make sure that things work perfect. And so this is the approach that's going to bring us a truly decentralized money that anybody can use. And you know, before the mempool was getting spammed just recently with this BCH nonsense, I mean, just last week, I believe, we were making super cheap transactions, right? The mempool was empty. We were literally making on-chain transactions for pennies on Bitcoin. So look, this is going to come and go for now. This is early days, guys, but we will scale Bitcoin. Bitcoin will be used as both a currency and a store of value. But for now, it's an amazing store of value, the best store of value that this planet has ever seen, gold 2.0. And there's so many smart people like Matt working to make this also really great as a currency as well. So very cool. So let's go ahead and go to Matt. Let's get a little bit more detailed here into some of these new features. First, Matt, before we actually go into one of those features, I actually want to see if you could tell the audience a little bit about Fiber and kind of how that's been used recently and how that kind of came to be. Just a couple minutes on that before we go into things like Lightning and sidechains.
Yeah, sure. I guess a decent chunk of my time over the last 3-4 years has been dedicated to optimizing block propagation between miners, between pools. So, you know, trying to make it so that selfish mining attacks are at least a little bit harder, trying to make it so that smaller pools can compete, trying to make sure that pools outside of China don't have super high orphan rates, and that pools inside China don't have super high orphan rates. You know, it's all kind of uninteresting to the average Bitcoin user, but it does make a difference to pools and a lot of people doing in the mining space, and hopefully just remove a little bit of centralization pressure over time. So Fiber is kind of the latest generation of that. I guess it's maybe a year and a half, 2 years old now. It is kind of a rewrite. I've gone through maybe 2 or 3 iterations of different networks to do very fast block relay around the world. Fiber is the latest version of that. So it's all kinds of wonderful, fancy technology that gets blocks around the globe, usually within 10 milliseconds plus the speed of light. Speed of light between servers in optical fiber can be, 100, 200, depending on which parts of the world you're in and where you're going. But 10 milliseconds on top of that's pretty good. So yeah, I mean, I run a network that a lot of miners use. It helps a lot of orphan rates. More recently, Fiber is the protocol that powers the Blockstream satellite. Just because the protocol happens to be also pretty good for going over wireless links, not just going over internet links. It is what they decided to use for Blockstream satellite. So you can actually get pretty close to mining on the Blockstream satellite with a pretty low orphan rate. You have to get your blocks out somehow because the Blockstream satellite's only one way. But just getting blocks from the Blockstream satellite can actually be pretty low latency. A few hundred milliseconds. It's more than you'd like for mining, but it's not that bad actually.
Yeah, so that's pretty amazing technology. This Fiber, spelled Fibre. You guys got to check that out.
It's the acronym spelled the British way.
There you go. But really, you guys got to check this out. I encourage everybody to Google this type of technology that these developers are working on for Bitcoin. I mean, this is just amazing stuff. Speeding up block propagation times, that is critical to keeping, that is critical to scaling for Bitcoin and keeping it decentralized at the same time. So very awesome, Matt. Thank you so much for that work. Let me then ask you then one more question, then we'll go ahead to the rest. But can you maybe describe a little bit more about maybe sidechains and just for the audience who's not technical, and just a little bit about why they could be so important?
Yeah, I mean, you mentioned earlier, like, what is the point of Bitcoin? Like, how do we think about what Bitcoin is? And I think over the last kind of few years, I've really come to a much kind of more solidly. I think that the future of Bitcoin really has to be people understanding what their trust model is. Like, why are you using Bitcoin? And what is it that you're getting out of it? And then how do we build a system that allows you to get exactly that out of Bitcoin, that allows you to get everything you want out of it, but also, if you don't care about certain properties of Bitcoin, then you shouldn't have to use a inefficient system which provides those properties to you, right? Like, if you are interested in Bitcoin only because of the 21 million limit, like you're only interested in having a deflationary currency, a hedge against whatever insanity you believe is going to happen in the world or in your country, then maybe you don't necessarily need to go be creating a bunch of coffee transactions on the chain. Maybe you're willing to use a sidechain where you trust either a local exchange or a conglomerate of exchanges. Maybe you even are fine using a Bitcoin bank, right? Maybe you're fine with someone else being your custodian. And you should use the thing that provides you the best user experience, provides you the best feature set, and provides you all of the things you want from Bitcoin. If you really need, if you're let's say you're someone in Saudi Arabia and you have a few $100 million and you're worried that you're going to be the next guy who gets arrested and thrown under the bus, then maybe you do need transactions on the chain. Maybe you do need to have that available to you, and you should certainly, be able to use that. Maybe you are in Venezuela and you're worried about your currency and you want to be able to use small value payments using Bitcoin. Again, what are you getting out of it? Maybe Lightning is fine for you. Maybe Lightning isn't. Maybe Lightning is even overkill for you. Maybe you're fine using just a Zappo custodial product or a Coinbase custodial product or whatever. And, really letting people get what they need out of Bitcoin, right? Because all of these kind of second layer solutions, all of these things built on top of Bitcoin are going to have different, almost always better properties than just Bitcoin, with some trade-offs in terms of, you know, who you're trusting and what the trustlessness is, right? Like Bitcoin is great because you can use it with very, very minimal trust, right? This was always kind of how Satoshi pitched Bitcoin from the beginning. It's why everyone is interested in Bitcoin at some level because of trustlessness. Kind of what feature set they want out of that can differ greatly, but ultimately they want to have this system where they don't have to trust someone. And so, yeah, and I think, you know, all of these systems have different trade-offs. So you mentioned sidechains, right? Sidechains is something, there's kind of two modes for sidechains, which I think have to be discussed pretty independently. There's kind of the signing sidechain, whether that's liquid or version 1 or beta of RSK or whatever, right? Where you have some group of companies or some group of entities which are holding the coins on behalf of the network, right? So they're holding all the Bitcoin for the network, and they're responsible for releasing that Bitcoin when someone wants to withdraw it back into the Bitcoin blockchain. And those are great, right? You can have all kinds of wonderful features. The Elements sidechain that Blockstream built, as you know, that you could deploy today. I don't know if anyone has it in production anywhere. Has great things like confidential transactions, so that you can transact Bitcoin without losing too much privacy in terms of all of your balances being hidden. Has other great features in terms of additional scripting capabilities that have been demoed pretty widely, and obviously also has much better scalability, right? It's a private blockchain. Private blockchains are, you know, they don't scale nearly as well as some other systems like a database, but also obviously scale infinitely more than Bitcoin. So you can get a lot of really cool properties out of that if you're willing to trust some group of companies to hold the coins for you. The other kind of model of sidechains, which I think was the one that was more focused on when it was originally proposed, obviously, is the hash power based sidechain, where you use merged mining, which allows miners who are mining Bitcoin to use their hash power for a second system using the same hash power, using the same mining to hold the coins, right? So this property of the first version was that these companies or these entities hold the coins. Now we're saying, okay, well, 51% of hash power holds the coins, or 51% of hash power for the sidechain, or 51% of hash power on the Bitcoin network, or whatever, holds the coins on behalf of this blockchain. And again, you can get a lot of the same features out of it. You can get a lot of the, not quite as much, but a lot of the same scalability features. Obviously, you can have all kinds of wonderful new scripting capabilities and smart contracts and whatever else, like the rootstock approach, where they're adding the entire Ethereum EVM as a sidechain, so you can use Bitcoin and interact with Ethereum. Same with things like confidential transactions and other wonderful features which you might want to have for privacy. And that's, again, you know, a different trust model than Bitcoin. You're trusting miners to hold your coins instead of trusting miners only to not double spend it, whereas you're trusting, you know, full nodes on the Bitcoin network to enforce that your coins don't get stolen, whereas in the sidechain, it's up to hash power. So, you know, it's all a question of what your trust model is and what do you want? What do you get out of Bitcoin? Are you okay trusting hash power? Is the thing that you're doing with Bitcoin already trusting hash power? You know, a lot of people take transactions at 1 or 3 confirmations. You're already trusting hash power quite a bit in doing so. And then, you know, you might as well use a sidechain that is hash power based. So it's all a question of what your trust model is, and you can get all kinds of wonderful features, much better UX than normal Bitcoin or Bitcoin on the Bitcoin blockchain by using all of these interesting second layer systems. There's many of them, and I think that's really what we need to be focused on going forward as a community of engineers and as businesses in the space who, you know, want to provide the best feature set for their users.
Absolutely. I mean, it seems like there are so many things, so many features that we can stick and stuff in sidechains. Like, it's pretty much unlimited what we can really do with sidechains as far as experimentation with new features with Bitcoin. So it opens up all sorts of amazing things. So let me ask then Kyle next. Oh, actually, we'll go to Jack. We went Kyle second last time. I'm trying to mix it up. Let's go to Jack next. what is, I just want to, just get a brief overview, because remember, this technology is so new. I just want to get a brief overview from you, Jack, of what does sidechains mean to you, and like, what do you foresee some of the great things happening with sidechains?
So I first of all thought Matt's description was phenomenal. The overview in particular of that a lot of these layers on top of Bitcoin that are offering certain feature sets also probably reduce, whether marginally or by a lot, some, centralization or whatever the case is. And it's just a game of trade-offs. The important part is that, we keep intact the, some of the original value props and what makes Bitcoin truly unique and valuable and such a long-term play that can really impact the world. So I thought that was great. Sidechains, for me, I'm not too much of an expert. Like, I think I spend my free time trying to keep up with people like Matt and these core devs. So I'm not going to, ramble on something that I don't know too much, but I know that there's like a lot of pressure from, some industry folks for efficiencies where they think a database isn't good enough, but a blockchain is too inefficient. And I think I'm interested to see some of these like large level corporations that are looking to get into blockchain, and you see like these big level deals with Ethereum and ETH Foundation partnerships and stuff like that. I'm curious just to see if Sidechains attempts to solve some of their problems and deliver some of the value that they're looking for in a blockchain that isn't super inefficient and isn't like super expensive to use and utilize, because everyone needs to know everything just because no one trusts anyone. The currency of, solo, no one trusts anybody is Bitcoin. But then it also offers some features that are independent of a database where, AWS can't do some of the things that Sidechains does. So I'm most interested to see if, businesses which have been interested in blockchain, whatever that means for a long time, if some of these, features and some of the values that they're looking to get out of it can be delivered with Sidechains.
Awesome. So Matt has to just go for a brief minute, but he'll be right back in just a couple minutes, guys. So let's go over to Kyle then. So and remember, I want to talk more than just sidechains. I also want to ask Matt a couple things about Schnorr signatures and Mast in particular. So so let's ask Kyle then. Let's get that started. Kyle, let me ask you: do you have anything to comment on the sidechain talk so far? And then, what do you think about some of the new technologies coming out, like Schnorr signatures and Mast?
Yeah, I think like Jack said, Matt's description of sidechains was pretty on spot. I don't think I really have anything to add there. But in terms, he made a really good point in terms of the layering of the system. So, like, you'll have the base Bitcoin blockchain, then you'll have all these layers on top of it, and then you'll be able to opt in to these different layers depending on what how much of a decentralization and how secure you need your transactions to be. So if you're depending on your threat model or whatever, you can opt into these layers above the base Bitcoin blockchain and get different features that you wouldn't be able to get on the base blockchain. So, and one of the systems that has kind of fascinated me for a while, it's like this trustless third party or trustless Bitcoin bank that you can have, where I actually wrote like a 3-part series on this about Tumblebit when that first came out, where you could have this like third party that you route transactions through, but they won't be able to see where your transactions are going. They won't be able to steal your money. So it's just like a server that's just providing that service of routing the transaction for you. So they can't do anything bad to you. So when you look at it that way, like if you opt in that model, like I know Bitcoin's all about like decentralization, but when the centralized party can't actually harm you, unless obviously they can go offline, and then you have to go back to the blockchain and make sure you get your revocation transaction in time before time's out or whatever. But those kind of models where you have this like trustless third party kind of really interest me. And originally I was interested in that because of Tumblebit, but then I found out that Tumblebit is currently only unidirectional, so you can only go one way. And actually the Zcash guys came out with a paper called Bolt a few months ago that I didn't read at the time, but then I saw Ian Mears' presentation from Scaling Bitcoin at Stanford last week, and he covered Bolt in his presentation. And basically, you can do unidirectional. You can go both ways through the centralized. It's basically kind of like a Lightning node, but it's just you and then the centralized trustless third party, and then the person you're sending the transaction to. So that kind of stuff is really interesting to me. And one other point I wanted to make was I was actually kind of worried after the SegWit 2x failed. What I thought they were going to do next was try to like soft fork bigger blocks into Bitcoin somehow, if they were able to get like more than 50% of the hash rate using like extension blocks or something like that. And I know that's one of the worries that Matt and his co-authors of the Sidechains paper actually pointed out when they first wrote that paper. Like, it basically gives miners have always had the ability to like soft in extension blocks and kind of not necessarily force a change on the network through a soft fork because people have to adopt the change. But it was something to think about. And the fact that they went straight to Bitcoin, or some of them went straight to Bitcoin Cash instead of trying to like code up this soft fork, just kind of solidified that point of like one of the whole reasons they didn't want to do anything else but increase the block size is because they just didn't want to. They just wanted like a simple solution that they didn't have to code up themselves. They just wanted the bigger blocks.
Yep, it's true. Very interesting stuff. So let's go to Jack then. While Matt will be back in a minute, guys. But let's just go to Jack and ask you, Jack. What do you think about? Well, first, let me ask you about confidential transactions and Bitcoin. When is that live on Bitcoin yet? And when can we look forward to when can we look forward to something like that?
So can I address what Kyle just talked about really quickly?
Oh, first? Yeah. Go, and then when you're done, go ahead and ask Matt the question that you had. Yep.
Oh, dope. That's bad. So the point on the reaction to SegWit 2x kind of being called off by whatever 6 parties signed, I think it was 6. I think that venture capital as an industry is super interesting, in my opinion. One of a really close friend of mine and mentor, Jason Fried, has written like a ton of stuff on venture capital, and he's not even involved in the crypto industry. And the interesting thing is that I'm going to overgeneralize pretty hard here just for the sake of time. But VCs have this business model of 1 in 10 successes will outprice the 9 failures, and so and they just kind of dish out bets essentially, and it creates a really interesting relationship for the founder of a company because most of the time, who you're responding to that pays your rent and pays your employees and pays for your kids' college, and who's actually using your product are two different groups. And it's a really interesting and difficult relationship for an entrepreneur to manage successfully. And I think in Bitcoin it's even more interesting because you can actually just invest in the underlying asset. So I think a lot of investors who have invested in Bitcoin, the asset, and then maybe to build out infrastructure has just like invested in core development or Lightning, for example, things like that, maybe have proven out to be a much better investment based on return than someone who's investing in like a wallet provider. And I think it's just a fascinating twist. And venture capital is a totally interesting industry and how it influences tech and the relationship that the product has with its users. So I just, anyways, am super interested in the reaction of the 2x crowd, because it does seem that there's some outside pressure to deliver, and they have their own timeline, but that timeline is not really related to the people using the product, it doesn't seem. And they want to pivot Bitcoin, and the Bitcoin is not theirs to pivot. They kind of like wanted to be like, face this way. It looks like we'll make money if you face this way, and we're like, no, I'm not moving. And so it's just an interesting dynamic that's playing out. So my question for Matt was one of the interesting developments that I think, or I hope, will happen with Core. I just want to hear your opinion. Is I don't know if you saw Roast Beef and Alex of Lightning Labs' new BIP for light clients, because I know that it is to replace and improve on BIP 37, which I'm pretty sure you co-authored, I think, if I remember. Yeah. So I just am curious to hear your thoughts on that, because not only should improve privacy and it should be more efficient, especially for full nodes, but then it should also enable light clients to with functionality of like smart contract stuff, And, Lightning specifically, you should ideally then be able to run like a light client Lightning node on your cell phone. And so I just wanted to hear your thoughts on that BIP draft if you've read it.
Yeah, I've read the draft. I think I read an old version of the draft, but I believe the current version is not too drastically different. Obviously, it's mostly about improving the privacy story of light clients. Right now, the BIP, whatever it is, current Bloom filter stuff, from a privacy perspective, is kind of garbage. It is also not great for efficiency of the full node. It's kind of okay for the light client itself, but the full node serving it kind of gets screwed. So yeah, the approach of their BIP is significantly better. I'm not aware of anyone working on implementing it in core specifically, but I think as they finalize it a bit more, they just published a big update to it. But as they finalize it a bit more, I'm sure someone will eventually get around to implementing it. It seems like really good work. Certainly, they've been testing it on BTCD. I guess they've implemented both the client and server part of it in BTCD. But yeah, it seems like really good work. So hopefully that'll get around to it. People will get around to it eventually.
So yeah, I know that there's a lot of people really interested in starting to. I know like Nicholas Dorier is interested, for example, in implementing Lightning for merchant tools and stuff like that, and consumer-facing Lightning stuff. And that light client is kind of what we're using to test out the software for the UIs that we're working on. And I know that Core obviously is the preferred full node implementation, so that'll be an interesting BIP to follow. I'm curious how that pans out. But yeah, dope. Thank you.
Awesome. And I believe Kyle has a question for Matt as well.
Yeah, Matt, while you hopped off for a second there, I talked about the threat of miners or anyone soft forking bigger blocks into Bitcoin via like extension blocks. And I was kind of surprised we didn't see some of the SegWit2x people like start to rally behind like a soft forked version of like increasing the block size after SegWit2x failed. Was that something you were kind of worried about? That would be like the next step for them, or do you think that they still might be considering that kind of move?
I don't know. I think obviously that's kind of a big change that would involve a lot of change in software, both from miners and from them as well. From an infrastructure point of view as well. I guess, I've certainly been disappointed by kind of what the result of SegWit2x has been. I was really looking for more kind of attempts to understand what went wrong. I think a lot of the big name SegWit2x supporters, like you mentioned, kind of in the open, have been talking instead about like, okay, maybe we'll switch to Bitcoin Cash, or maybe we're just going to go work on Ethereum, or the most annoying one was like Bitcoin Core won this round. Like that, I just think it's 110% the wrong message to be taken. Some of the folks who signed the NYA, who weren't the big backers behind SegWit2x, I think maybe are looking at this and saying like, okay, well, what went wrong? What is the approach that would make this kind of change happen in the future? So I'm hopeful that some part of that community and the community at large, I think, has really been learning a lot about why to value Bitcoin, and coming around to the understanding or the view that Bitcoin, as long as it is a community effort, whenever we want to change it, that kind of gives Bitcoin a lot of value. And I think that that's a very powerful thing for people to learn. And I was hoping more people were going to learn that from SegWit2x's kind of failure. And clearly the biggest reason it failed is because there were so many loud community voices saying, no, this is a bad idea. Some people say like, oh, well, it was because of Bitcoin Core, but I think that's just absolutely A, false, and B, just the wrong message to take. So So as to your question about extension blocks, I think, yeah, we might see some folks try to push for that again. I hope that anyone in the future looking at consensus level changes is really saying, well, actually, for this to happen, it needs to be a community effort. For this to succeed, it needs to be a community effort. And I think that's true whether it's a soft fork or a hard fork. So yeah, I mean, we'll see what happens. I'm also hopeful that, like Jack mentioned, I think the folks working on Lightning are looking to, or my understanding is they're looking to ship in not too long a beta that people can use. That, yeah, at least for small value payments. And I'm looking forward to, I know there's a lot of exchanges and a lot of folks interested in going ahead and integrating that just to see what it looks like and start looking at that for small value payments. So I'm really hopeful that we see kind of how the landscape changes through Lightning and through rootstock shipping and through some of these other things being deployed before we start talking about yet another consensus change for changes to the on-chain capacity. I do think there's still a lot of legitimate demand for changes to on-chain capacity and future increases, and I hope that we can work better together as a community to move those kinds of things forward. Like I said, I think I was hoping some of the folks backing 2x would, say, okay, well, we need the community. So at least if we try again, start with the community, start with the Bitcoin community and say, what are the contours of a proposal that actually might get adoption, might get community backing, and then move forward from there. Disappointed that isn't happening as much as I'd hoped, but maybe, as people kind of think and reflect over the holidays, that'll be kind of what the next attempt in 6 months looks like. And hopefully by then we'll have a better understanding of where Bitcoin is with Lightning and rootstock and whatever else. And then we can have a much, much, much more informed discussion about what on-chain capacity should look like in the long term.
Yeah, I mean, to your point about it being these hard fork attempts being like a learning experience, we have seen like some evidence of that being the case in the past. If you talk to like some of the people that put like no2x in their Twitter handles or whatever, a lot of them will tell you that they were like the biggest supporters of Bitcoin XT when that first came out. And I think I think that was even the case with like Samson Mao. Like he was all about big blocks, and then he like took a few hours to talk to a few core devs and then did like a complete 180. So I think it definitely does. People do tend to learn from these hard forks. I think with each one that with each attempt that goes by.
Awesome. All right, so listen, we're already kind of at the hour mark here, Matt. So I'm going to ask you a few lightning round questions, no pun intended, of course. Matt, so let me just a couple quick questions here, and just try to answer them kind of quickly here, so we can not make the show too long for the audience. But let me ask you, Matt, how long do you really foresee until kind of Lightning gets massively deployed, right? Obviously, it's all ad hoc and has to have organic growth from the ground up. But do you how long until you? Because I actually asked Jack this question last show, and he said really it's going to come into fruition in 2018. I think by the end of 2018, Jack said that the Lightning is really just going to be everywhere and taking off. What is your estimate on when Lightning is really going to take off? I know it's a hard question to answer, but
hard question. I mean, you're going to see it in certain niches deploy first, right? You're going to see some people who are trading on exchanges look to hold their money off of the exchange and then only deposit when they want to place an order. I think that'll be one of the first niches where we really see it get some traction. I think hopefully you'll see it in some of the mobile wallets and some of the kind of user-facing small value payment stuff in 2018, like Jack was saying. Hopefully for the kind of $20 to $50 payment range, we see major deployment by the end of 2018. I don't know about this, probably 60% shot that that's really taking off by that point. Yeah. But I think in certain niches, you'll definitely see it in the first half of 2018 and definitely by the end taking over some niches.
See, this is awesome, Matt. I mean, you're using all of these dates, Matt, and they're all in 2018, people. Realize this. all those dates that Matt just used was 2018 dates. Okay, so I mean, there's the people because
small value.
Well, like for small value, because Matt, there's a lot of people out there that are just saying Lightning is 10 years away and 5 years away, and it's like, whoa, we got UI for this stuff now, people, and so you really got to check it out. The Lightning stuff is making amazing progress thanks to people like Jack and thanks to people like oh my, now I can't even think of her name. Oh my God, Elizabeth Stark. Thanks to people like her, and then of course Roast Beef and all the team over there, guys. Just Lightning Labs. I mean, holy crap, amazing stuff. So then, Matt, another quick question here. Then, confidential transactions. I just want to know, is that like is a separate bit from Bitcoin? Is that in Bitcoin? When can we look forward to that being used more in Bitcoin? Because obviously that's a really big for privacy.
There's still a lot of momentum in the research of confidential transactions. We saw from Benedict Bunz from Stanford and Dan Bonet presented some new work. I think they might have presented it maybe 6 months ago in like a Stanford lunch something or other. But they're just publishing a paper now that is kind of major new scalability work and making confidential transactions more scalable. So that's really great work. So. I mean, the research has to settle down before it gets into Bitcoin. I think the current generation stuff from Benedict and Dan and those guys is really exciting and is starting to get to the point because they're aggregatable where it's actually realistic to start talking about looking at it in Bitcoin. But Bitcoin's consensus rules change slowly. It takes a lot of backing to get something like that to change. Not to mention, obviously, because it is strictly worse than having no confidential transactions, even if it is aggregatable and the range proofs are not that big, it's still going to be obviously significantly worse, which means it'll be a political fight, I'm sure, about scalability thereof.
It sounds like though
not in 2018.
Yeah, I was just gonna say that sounds like more like 2019 stuff. Maybe 2020.
2019 sounds aggressive, but we'll see.
Okay, well, but this is what's coming is after the scalability, because right first the scalability, right? That's kind of like our first concern. Then after that comes the privacy, which is number two. Because we really want everybody to be able to use this. But in addition to that, we need to keep the decentralization, the censorship resistance. We need to have as much privacy as possible available as an option for some users. Because obviously there's always going to be trade-offs, right? Privacy and speed and things like that. So we want to be able to give as many options as possible. And I can assure you that privacy is something that people will be thinking about, if not already thinking about real soon in Bitcoin. Right now, priority though is scaling. So very awesome stuff. Then just a couple more quick ones, Matt. Schnorr signatures. Can you maybe go just a little bit about why those are important and when we can start maybe seeing some of that kind of stuff take off?
Yeah, so Schnorr at a high level was a patented signature algorithm. The patent expired a few years ago. Had it not been patented, almost certain that Bitcoin would have used Schnorr from the beginning. But now that the patent's expired, we can start looking at using it. There's been a few rounds of different ideas for how to do Schnorr, getting all of the features that we want out of it. So you get multi-sig aggregation. So if you have an n of n multi-sig, so that's 5 of 5 or whatever, it just looks like a single signature on the chain, so that the scalability there is very, very great, and you can have much better multi-sig there. You can also, if done right, you should also be able to take all of the signatures in all of the inputs in a transaction and merge them into one signature. You can, in theory, also potentially do this across an entire block, so that blocks can have kind of one signature which aggregates across all the transactions, or just validating in batch. So making sure all of those things work right together is not just, you can't just kind of say naive Schnorr. You have to have more kind of thought put into it. So I know some folks have been working on that and recently decided to switch. There was previous work on this that people weren't aware of. And so recently decided to switch and use the kind of previous work from academia on how to get some of these properties out of Schnorr. So I think it's progressing nicely is my understanding. I think there's still a bit more work to do to finalize exactly what all the crypto will look like. But I would expect to see a proposal in 2018, not necessarily, and then obviously when and at what scale it kind of gets adopted in Bitcoin's consensus rules is a highly political question that I really have just no idea.
Yeah, sure. So that's really important, I believe, because this is going to allow for further scaling of Bitcoin, right? Because it does condense the signatures, and this allows for more privacy, I believe, as well, right? This could have the option for more privacy. So this is kind of a really another big deal that I just really wanted to call attention to. Though it is still highly, as Matt says, highly in development. Still early days, you know, we can really start looking forward to this stuff, to Schnorr signatures. Again, this is more of the privacy stuff. So again, this is more of like the 2019, 2020 stuff, but really important because this is what's coming down the pipe. So very awesome. And then finally, one last question for you, Matt. MAST, M-A-S-T. If you could go into just a little brief bit about that and why that could be important for Bitcoin. And then after that, I'm going to ask everybody if they have any questions for you. So go ahead, Matt.
Yeah, so there's currently 2 proposals from MAST, I believe, and there's kind of a third, but it's much further out. So there's one that's, I believe, kind of joint work between Lalu and Johnson. So Lalu from Lightning Labs and Johnson, who's kind of independent from Hong Kong. And then there's also work from Mark Friedenbach from Blockstream. So there's a lot of work kind of going on in that space right now. High level MAST is a way to change how you think about script in Bitcoin so that you can have kind of complicated scripts that you only reveal in the case that kind of you need to go up to the script and kind of prove that someone is doing something wrong. So ideally, a MAST deployment kind of looks like a n of n Schnorr multisig or some other script that is more complicated. And so this kind of results in every transaction which has all these scripts, you know, like Lightning or all of these kind of more complicated things that people want to do using Bitcoin. If every participant in that transaction, so, you know, everyone who is a party to that Lightning channel or everyone who's a party to a Tumblebit transaction or whatever, agrees on what the outcome should be, they all just sign, and then you never actually reveal the script. So it's a lot better for your privacy. It's not, you never reveal what kind of transaction it was. It's just an opaque, look, there was a signature or there was this other thing, but we're not going to tell you what it was because we don't need to. Obviously, that also helps for scalability because if you don't have to tell anyone what that script was, then it doesn't have to go on the blockchain and things scale a whole lot better. So yeah, it's really nice for being able to do really complicated scripts on Bitcoin without necessarily having to reveal it. There's also some things you can do with more efficient multisig in it, especially when combined with Schnorr. So there's things to look forward to there. As I mentioned, there's, I believe, 2 current proposals, and there's a lot of back and forth that, to be honest, I haven't been following that closely, but there's a lot of good people working on that. So again, I believe Mark actually already has a hard proposal out. I don't know if there's code. I believe there is. And I think kind of, you know, people will, I hope, circle the wagons on what that proposal should look like in kind of final form in hopefully early 2018, but we'll see. You know, these things, they can take a lot of time. So I wouldn't be surprised if it slips into kind of second half, fourth quarter 2018 before we see, again, a hard proposal of what this might look like in Bitcoin to the community at large. And then, you know, what happens with activation is always a crapshoot.
For sure. I don't think we'll be using BIP9 anytime soon, but so we'll have to see how we're going to activate things from now on. But that was very cool, guys, because remember, really that allows for MAST. That's going to allow for more complicated scripting, so we can do even more things than what we can now with the limited Bitcoin scripting language. And again, it even allows for more complicated multisig stuff. So again, this kind of allows for really complex, amazing smart contract technology that we can really start building on top of Bitcoin. So just really important stuff, awesome stuff. So many things coming down the line, guys. Thank you, Matt, so much for sharing. Let's ask the other panelists. Do you guys have anything or other questions, any comments you want to ask Matt at all? Nope. Okay. All right. Well, then, oh, go ahead, Kyle.
Well, I mean, I guess we could ask, in a hypothetical world where we all are in the Bitcoin community singing Kumbaya, and we really needed a hard fork of some sort for the block size limit eventually, or block weight limit now. what would that look like in your opinion? Would it be like some sort of, the way I look at it, I liked how Rusty put it. I don't know if you saw that post he made like 6 months or so ago when he was talking about what it might look like, where you said like it would need to be like a permanent solution with like either some sort of adaptive size or like just one that grew gradually over time, maybe clean up some technical debt. I don't know what, I know there's the hard fork wish list too, but if you have any thoughts on that, then.
Yeah, I mean, I think obviously there would be a lot of kind of technical cleanups and technical fix-ups that we would see kind of go into it. There's a few lists of things that people would be interested in that people can go look at. I think in terms of the block size, obviously, it'd be nice to not be revisiting this issue every 3 months, every 6 months. So definitely, I think pretty much everyone in the Bitcoin community would be interested in a longer term solution. Ideally it would be something that was kind of a bit more adaptive. There's been various attempts at coming up with something. None of them have quite worked. I think some people are kind of more convinced that it's not possible to build something that is adaptive and also incentive compatible. The closest one was probably something referred to as flex cap, flexible cap, which allowed miners to kind of give up some difficulty so that blocks get harder to mine in exchange for mining a larger block. And then you can use that information to adjust block sizes over long periods of time. Again, I don't think it didn't quite work out. There were a number of issues with it, and some people think that it's not possible to resolve those issues. I'm still hopeful, but it needs more research. There hasn't been a ton of kind of research effort put into that space. Barring that, certainly, I mean, you definitely want to look for something like a longer term kind of gradual increase. Every block is, X% higher or X points of a percent higher. And then you get kind of this long-term increase. I think obviously also having an understanding of what things look like with Lightning and with RSK and with all these other systems over the next 6 months is going to be important for what some of these constants look like, right? Picking a constant and saying like, okay, well, in 2050, we're going to be at point whatever megabytes or, X megabytes, right? Like that or X mega weight, obviously, is kind of a difficult thing to pick in a vacuum. So getting people to agree to that, you definitely want to have a bit more information about what things look like in the medium to long term. But I'm really hopeful that we can start to learn some of those things in the next 6 months or so. I don't know that really answered your question at all, but hopefully.
Awesome, man. Thanks so much, man. All right, guys. Look, we gotta close it down here. We're going over an hour, so I just want to thank all of our guests. Thank you guys so much. Thank you guys to the viewers. We had over almost 2,000 live viewers, guys. So over 1,900 live viewers. The chat was going along great. We had some great conversation there, and we hope you'll join us in the comments too. Give us a couple comments, please, guys. Give us a thumbs up. So we can help reach, so we can get into more people's YouTube feeds. Give us a thumbs up, give us a subscribe, give us a thumbs down if you don't like us. But I guess the Bcash already did that and took down the WCN episode. But hey, we're still here. We're still going to be here every day, every week, every Sunday. So let's go ahead and say goodbye to the panelists. Jack, where can we find out more information about you, sir?
I'm all over the internet. I'm on Twitter. I hang out in the core Slack, the L&D Slack. So yeah, DMs are open. Slide through.
Slide through, people, slide on through. That's his hip hop speak saying. No, ladies and gentlemen, this is not an Eminem lookalike. This is Jack Mallers. All right, Kyle Torpy, where can we find out more about you?
Yeah, you can find all my articles and stuff at kyletorpy.com. I have a daily newsletter too, in case you want to get all the stuff that I write and all the other stories that I find interesting. And I'm also on Twitter probably a lot more often than I should be. So you can find me on there too.
Absolutely, guys. Hot off the press from Kyle Torpy. He's got a daily, I believe it's daily newsletter that you guys got to check out, all the latest and stuff going on with Bitcoin. I definitely try to retweet what I can, but look, Kyle's definitely got it all organized and beautiful. So definitely, guys, check it out when you get a chance. And finally, Mr. Matt Correll, where can we find out more about you? And just a real quick shout out to Alex at Chain Code Labs. We had him on the show, and we had a great time, and we hope to have him on again. But where can we find out more about you, Matt?
Yeah, I'm right there with Jack. I've got public DMs on, so feel free to ping me whenever. It's at the Blue Matt on Twitter. Also, spend probably way more time than I ever should on Twitter. If you're interested in development, always come on IRC. You can always see my work on GitHub.
Guys, we all spend way too much time on Twitter. All of us, okay? I think, but hey, that's where the communication is. That's where the world is speaking. And really, in my opinion, it's kind of taking over as the kind of communication medium, like within Bitcoin, overtaking Reddit, overtaking all sorts of stuff. So really have a great time on there, guys. So you can find me, of course, on Twitter at @TheOneVortex, all spelled out, just like you see there on your screen. And we will be back again, guys, every Sunday at noon with another episode of the Bitcoin News Show right here on the World Crypto Network. So guys, thank you guys so much again. I'm so excited about what's coming down the pipe. I hope today we could get you a little bit more excited about what's coming down with Bitcoin. And there's just going to be so much stuff, guys. So again, thanks guys so much for joining us. We shall see you next time. And until next time, guys, keep on talking Bitcoin. We'll see you guys later.